What is up, YouTube? Welcome back to Stocks by the Numbers, and today we're jumping into Corning Incorporated, ticker symbol GLW, trading here on the New York Stock Exchange. Stock closed here at 32.11, and we're going to look at a few numbers and a few charts, and we're going to see if we should potentially begin to piece our way in, or if we should kind of sit on the sidelines, wait for a little bit of a better price. Now, before I go any further, a little disclaimer: the markets, they've been volatile, right? And a lot of companies have been selling off for the last couple of weeks. Some even really since the bull dropped, year to date. So I can easily say, well, it's at 32, it'll probably go down to 30 and you can buy it there. And I'll probably be right. And then, you guys will think, I'm smarter than the average bear. But at the end of the day, remember, if we're talking about accumulating and building a position long term, remember, you're going to be piecing your way in most likely. So if this week you stepped in and you took a position at here 32 and change, and then you turn around in a month or two and it's at 30 and a half, number one, not the worst case scenario, right? You're not going to lose everything. But more importantly, if you believe in a company, like I always say, if we liked it at 32, then we're going to love it at 30. So don't be afraid, if you do believe in the company, to continue to add to the position, lower your cost basis, and really build a nice sizable position in a brand name company like this moving forward, especially since they pay you a dividend to own it, right? So let's jump in real quick. 52-week low of about 29, right? So you're only a few points off the low. 52-week high, 43.5, so we do have some room to grow here. This is not the best metric to use. However, it does help sometimes to know, where you are in relation to the last 52 weeks of trading if you're buying, near the low of the range or near the high of the range. So moving forward here, we're looking at a PE of 15, which is probably right around the industry average. You could potentially say that the PE is even undervalued. It could potentially be up to 17, 18, maybe even 20. Dividend yield 3.36%, paying us to own shares of the company. First thing I look at, $27.1 billion market cap. We come down here looking at the annual revenue, and we see $14 billion for last year. So the company's trading roughly 2 times total revenue for 2021. Which again, if you're new to the channel, I reiterate this basically in every video. In the private sector, a company's quote-unquote worth about 2 to 2.5 times total revenue. In the public sector, if you have a healthy balance sheet and a good company and business is growing, you should trade probably higher than 2.5, 3 times total revenue. So just looking at that, 2 times last year's revenue, you could say undervalued. Again, PE under 20, we could say undervalued. But we move forward here because the company recently posted earnings. They missed on the EPS side, but they basically met in line with the revenue that they were supposed to post here. As you can see, 3.6 billion compared to the estimates, expectations of 3.67 billion, but the EPS again did come in light, which is why the stock has been a little rocky in the last couple of days. But I just wanted to show you guys here the institutional investors. Quantamental Technologies acquired a new stake. Guardian Wealth Management boosted its holdings. EP Wealth Advisor boosted its holdings. Horizon Investment boosted its holdings. And finally, Sequoia Financial Advisors boosted its holdings. Institutional investors and hedge funds own 69% of the company's stock. Now, institutions like this, when they take a position, it's for 2 reasons. Number 1, a stock is undervalued. Number 2, they feel that not only is it going to grow in value, but it's going to grow in the long term, right? So when you're a fund manager or an institutional investor and you're investing assets for millions of dollars, tens of millions of dollars, not only is growth and profits important, but more importantly, getting that tax break is very important as well. So if you have 2 scenarios where you can make 30% in the short term and in the long term, you technically want to take the latter because you're paying about half the amount in capital gains tax, right? I'm sure you guys are familiar with that. So, just keep that in mind here. That's why sometimes you have to look at information like this, who's adding to their position, how much do they own, and more importantly, like down here, what are their ratings on the companies and what are their price targets. So Susquehanna, as you can see, reduced their price target, but they reduced it to 40, right? So that's still like 25% higher than where we are now. hold rating on the company. Morgan Stanley reduced price target from 40 to 36, higher than where we are now, equal weight. UBS reduced their price target to 40, but set an outperform rating, right? Still higher than where we are now. Credit Suisse, neutral rating, $36 price target, higher than where we are now. So as you can see, 6 analysts have rated the stock with a hold, 6 given a buy. According to this website, moderate buy, average price target of $39.91, right? So if the average analysts basically all are coming together and they're basically saying it's either a hold or a buy, and on average we're going to get to $36, $38, $40 a share, just to remind you, we're at $32.11, right? Keep all that in mind. Switch over here to a trading view real quick because I want to show you guys, look, in the long term here, I don't always follow technicals, but in the long term, look at this, back 02, we're basically, I mean, slow and steady growth, as you can see over the years. That, you know, that's why I'm not really hating on the company, because it does seem pretty healthy. They pay you a dividend to own it, and it looks like over the years you're going to get some growth, and again, they're paying you to own shares of the company. However, these blue lines right here are kind of showing us a rising wedge, and technical analysis tells us this is actually a bearish pattern. So if it does follow the technicals, I mean, you know, you could see a breakdown and a pullback here, again, into the high, maybe even mid-20s. But remember, if on paper it's a good buy and it's a healthy company, if we like it at 32, 30, 29, and it pulls back to 27, 26, yes, it sucks in the short term, but in the long term, remember, they're basically handing you shares, right? Again, you have some of the top analysts on Wall Street all basically telling you that they feel that the company's undervalued, and you got an average price target of 40. So if it does pull back to 25, let's say, yeah, that's really going to suck for you in the short term, but you should, you know, look at it as just a greater buying opportunity at a lower level. A pattern inside of a pattern here, as you can see, switching, over the last couple of years, this is pandemic era. This is the bottom, our bottom support trend line, our top resistance trend line, We're basically kind of forming a symmetrical triangle, you can say. Symmetrical triangle is neither a bearish nor a bullish indicator, which means that once it hits the apex here, it could potentially break up or has the potential to break down. Remember, if you step in and buy it here, in my opinion, I think it's undervalued. If we step in and it breaks up to the 40s, boom, you could take profits in the short term. If it potentially breaks down, like we showed here, double indicator showing it could potentially break down, yeah, it's going to suck in the short term, but if you like it at 32, you should love it down at 25, 26 level. I mean, come on, let's be serious here. And moving here into stock charts here, last thing I'll leave you guys, we're looking at the weekly. RSI about 46, right about mid-range. And as you can see here, let me take the inspect off. As you can see here, 200-day moving average at 32.07, and you can see close today at 32.11. However, you know, showing from, this is basically the beginning, where is this? April, May 2021. You could see, I mean, along with the rest of the market, really, a lot of these companies have just like slowly been selling off in a downtrend. But remember, in the short term, it might hurt, but in the long term, just think about what you're buying, right? And that's why I say don't be afraid to look at the numbers, because if you're looking at this, you're like, yeah, it's kind of in a downtrend. But if you look at the numbers, all of a sudden it's undervalued, right? And again, like I said, for this to close at 32.11 above this 200-day moving average, that looks like a pretty good indicator. So moving forward, tomorrow is Friday, so we'll see where it ends the week here, if it can, close above that level. But as you see here, look, the high, 32.93, mid-Bollinger Band, 32.89, right? So it hit that level and kind of pulled back to the moving average. But we do have the potential to go up here. We have a MACD, looks like it's potentially turning and crossing. So we could start to see a little bit of momentum here, bringing us into, the mid and potentially high 30s. Switching over to the daily real quick, and we see RSI 54, not too bad, random pop-up there. And of course, down here, 50-day moving average 32.19, did close 32.11. So in the short term, we could say that we could maybe see a pullback to like the mid-Bollinger Band here of 31. We have a rising MACD, so that's why I'm saying it could potentially cool off for the next couple of days or even weeks and slightly go down or potentially just remain flat. But remember, if it looks good here at these levels, if it does pull back, we'll just take what the market gives us and just keep accumulating shares if we can. This 200-day moving average here of about 35, again, just like we looked at on the weekly, the moving average of around 35. So, that's going to be our main resistance point. But looking at the Bollinger Bands, again, top Bollinger Band here, 32.87, hit a high of 32.93, right? So that was the resistance, pulled back to the moving average level. So overall, again, some technical indicators could potentially show us a sell-off, but looking at the numbers, again, 2 times total revenue, they pay us a dividend to own it, 15 times, trading 15 times EPS, that's what the PE ratio is. And, overall, in my opinion, I would be a buyer. Looking at how the analysts, the institutions feel about it, again, just looking at these charts, again, I know there are potential red technical flags here, but might not be the worst idea to start building a position in a company like Corning here, GLW. Because again, even if it does have a 5% pullback here when you have more assets to add to the position, remember, they're paying you almost 3.5% to own the stock, right? So that's why if you have a slight pullback, it's really not the end of the world. Short-term traders and investors who might be watching this video, again, we do have some crazy technical indicators here. That's why, honestly, in the short term, it really could go either way, which is why I brought up the stock charts here, right? You could have a jump up to the high 34, 35 level, but also after hitting the top Bollinger Band and closing here below the 50-day moving average on the daily, you could start to see a pullback to 31 and potentially down here to the bottom Bollinger Band of 29. But remember, the company is healthy. The numbers look attractive, so if we like it at 32, we should love it at below 30. And I'm going to leave it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, if you like the video, give it a thumbs up. Helps out the algorithm, helps me get a few more eyes on the channel. If you like the video, please do me a favor, push the subscribe button. It means a lot to me just to see, recently the community's been growing. A lot of people are throwing out recommendations for videos. We're having nice back and forths here in the comments section. That's really what I want to do here. I want to bring you guys undervalued assets and investments and just have open-ended discussions about it. And, we can come up with more educated decisions moving forward for the community collectively as a whole, right? So thanks again for stopping by. Appreciate your time. And, yeah, I know today's Thursday, tomorrow's Friday, so I hope everyone finishes out the week strong. I hope everyone has a decent month, and I know markets are rocky, volatile, and uncertain, so like I always say, I wish everyone success. I hope everyone makes a few dollars. I'll see you guys in the next one. Have a good day.